Hi everyone, this is Rohit from Lifestyle Mastery, and today I'm excited to have Jordan Olivas, who is a co-founder and CEO at QisstPay, which is a digital platform that allows users to purchase goods on installment base. QisstPay is focused on Pakistan market and offers 0% interest financial services. Jordan is a graduate from University of North Texas in 2015. Welcome to the show, Jordan.
Hey, thanks for having me. I'm glad to be here.
Awesome. So you have a very interesting journey. You born and brought up in US and you went to Pakistan. What made you start QisstPay and why Pakistan of all the countries?
Yeah, I mean, so when you look at kind of my background, it's all fintech. So was at Klarna, Charge After. I was before that, I was doing software services and consulting for a software house, was essentially building fintech from the ground up. So I had a really technical understanding of what issuing, acquiring, and network switching was all about. When I came to Pakistan to visit a friend. I made a small investment into a software house there. And when I was there, I didn't realize how big the population was. And when we started off, it was really interesting because I saw this massive market and no one doing anything. Because it's very difficult to do business in emerging markets, especially as a foreigner. I didn't really have any connections there. So I literally just started raising money, started cold calling merchants. It's really cool, like having dinner and meals with some of the executives that I was cold calling, a year ago. And now it's like, they're one of our biggest customers, right? So it's kind of cool to like listen to that transition happen. But I just saw a big opportunity, and my view was like I could do it better, right? Than what the banks were. And we started off as a buy now pay later company, but our vision was never buy now pay later only, right? Even looking at I was looking back through my very first pitch deck that we had to investors in the very beginning, and even then we talked about acquiring, we talked about which is like payment processing. We talked about doing a wallet. We talked about doing banking, right? So the vision was always to build a platform for businesses to work on and for us to help facilitate these transactions. We went with buy now pay later specifically because it's a market that was very hot. I knew it really well. I knew it inside and out. I understood what it took to acquire new merchants, and so that's what we started with. And about 6 months in, we were processing 20% of all card volume. Easily 20% of all card volume for our target markets. We probably actually had closer to 70% of our TAM. But we are processing for the entire country. We are processing double digits percentages of the entire card processing volume in the country, which is kind of crazy. And when you hit that at 6 months, I just didn't think we'd build a platform this quickly. So we iterated. We tried to understand what was the next step. Was it banking? Was it B2B, buy now, pay later? Or was it, a wallet? What was that next step? And what we determined is that we built all this great infrastructure, SMS smart routing for OTPs. We built out, helped one of the banks build the first ever payments payout systems. And so we have this great infrastructure that we built that we wanted to extend this to all the other payment methods. So we said, let's do one-click checkout. One-click checkout is very much as a consumer and merchant-facing term. It's not really what it's all about. What it is the one-click checkout is really a container for a suite of really amazing e-commerce tools and payment tools that is essentially a data switch for all the payment methods to work within. So think of it as a platform. And so our idea is using phone number as an identity layer. And underneath that identity layer, you have invoicing, A/B testing, financing, cash on delivery, BNPL, crypto, wallets, really everything you can think of, all utilizing this massive network. And what we found was when we launched this, that there was a amazing natural fit for the US market. And so we tested it out with a few merchants in the US, and there was immediate traction. People were saying, yes, I want this, send me the contract, how do I integrate? And now we launched into the US, which was a very big shock to the market, right? Everyone's like, oh, they're pulling out of Pakistan. What's happening? It's like, no, like it was really an extension of this new platform was a piece of software, right, that allowed retailers, allowed fintech, that allowed payment companies to really have higher adoption rates and allow merchants to optimize their checkout. Because if you look at e-commerce brands, retail brands, they focused on SKU availability, faster shipping times, better payment methods. They focused on how do I get more customers into my website. But where no one had really focused yet is really at the very end, which is checkout. And so we saw it as a massive opportunity because there was two players in the space in the US that were doing it. But when I looked at their business models, I didn't agree with how either of them were operating. There's a lot of holes and how they were being run. And so I said, yeah, let's go off and let's do this. So yeah, where we are today, thousands of merchants on our platform. Our one-click solution, which we just launched a few months ago, already has 600 retailers that are signed on to it. A few hundred of those are live, and we're bringing them more and more live every day. Actually just launched Lenovo in South Asia, which is really exciting. We have a few others as well, which are going live very soon. So really excited to get a few more of those live.
Interesting. And you talked about checkout companies. A couple of months back, Fast was a company which had attracted a lot of investments, which were helping people expedite online purchases, and it got shut down. Why do you think? What went wrong with Fast?
Yeah, so the problem with Fast is that their business model did not work. So in payment processing, right, let's just say for the sake of math, cost of acquiring a transaction online is roughly 2.1%, give or take. They were then covering frauds, chargebacks, and everything else like that, which really was, let's just say for the sake of math, half a percent or 50 basis points, 50 bips, right? So that means your cost of processing is now minimum 2.6%. They were charging 2.9, so that means you have a margin of 30 basis points, which is one extremely slim. So by the time that you pay a referral partner or anything else, you're losing money, right?
Right.
And the other problem with that model as well, right, is that and what I've seen with how they operated was that when they went into the market, they started off as a checkout management platform. But what they said was that you have to use our processing. So when you're going into big companies, you can't do that, right? Like they have these established relationships, 5-year contracts usually, with a major processor such as Fiserv or FIS or really anybody else. You can't disrupt that, right? They have to maintain those contracts legally. And so what we viewed was that they were acquiring all these small consumers or small merchants, but then acting instead of a checkout management solution, they became a checkout button, right? So they were basically only providing value. It was a good platform, by the way, from a UI perspective, a consumer flow perspective, was absolutely gorgeous. And I will say, Fast did an amazing job of helping, kind of make the trails for everyone else in the market. They brought a lot of education in the market, but at the end of the day, the economics just didn't work, right? And so for us, we try to stay as agnostic as possible. We have a ton of payment processors. We have three cryptocurrency options available on the platform. We have most of the buy now, pay later options available, not just in Pakistan and the US, but we have a lot of these companies, right, operate globally. Stripe's in 20-something countries, Klarna's in almost a dozen countries, and so checkout.com is in a dozen countries, right? So we have all these integrated as our platform. So for us to go live in another country, there's literally no difference, right? It's those companies already operating there. We just simply pass a different currency, and you're live. And so we just got an agreement with a major merchant that operates in 9 countries. And for us, we did the work estimate, zero cost for us. Where it's a purely borderless solution because all their payment options are options that we already have integrated into the platform. So we're acting purely as a software as a service platform.
Got it. And Jordan, you had also mentioned that you were onboarding a lot of retailers, especially in Pakistan and US. What was the entire process of onboarding these retailers? Was it mostly through cold calling or referencing? What did really work for you when it comes to building that pipeline?
Yeah, so in the US, we are, a lot of cold calling, cold emailing. I have a fairly large retail network as well. So I've been able to leverage that very successfully in getting new merchants. On the Pakistan side, we are the largest player. Our next closest competitor has 8% of the market, or 8% of the volume that we do. So like we are by far the largest. So we have a massive base there where um, I think this week so far we've had 30 inbound leads just on one click. And that's not including any of the other business lines that we have there as well. So it varies market to market. But look, a lot of people ask how'd you get into Pakistan retailers from the very start. It was old school cold calling, cold emailing, LinkedIn. Like there was nothing, no sort of fancy algorithm or Facebook ad strategy. It was just kind of old school. Get out there and just do the work.
Got it. And you moved back to Dallas and you made it the headquarters. Why was that move done? And what has been your learnings from working in a emerging market and then transferring that the learnings to US?
Yeah, so when you look at where we were in Pakistan, we had a massive market share. And we looked at that and we said, hey, we're going to continue operating in Pakistan. We decided to work in the US as well as a secondary, as a second market. We said, I had to make a decision, right? The reality is Pakistan is still a very large market for us. We get thousands and thousands of sessions a day. We're a top rated website, there. We have most of the major merchants in the country. And we have the only lending license for BNPL in the country as well. What I had to make a decision on was where will I have to put more effort to be successful, right? And the reality is that the US was a brand new market for QisstPay. So we had to put some focus there. And look, the product is more mature in Pakistan, and we have more consumers, more merchants. So it's just a much different scenario, right? It's like anything else. And we saw it with when I was at Klarna. They were not many people know this, but they were in the US market for years, right? Before they gained really any major traction. When they did is when they started putting more focus into it, right? But guess what? Sweden is still a massive market. They still own 80% of the volume there, right? So it's a very similar story to how we kind of evolved. And although Klarna has been taking a hit in the news lately, if you look at it, there's still a $30 billion company, right? That is 10x in a few years. So there's a lot of naysayers out there of what they're doing. And look, I understand it's not the best time in the market to be in BNPL, especially for a company like that, but it's still a massive powerhouse. And they're a bank in Europe. They have traditional payment acquiring. They own SoFort, right, which is a massive payment option in Germany, right? They're still a massive brand, and what I find is a lot of people get caught up in the news, and like I get it. I'm not saying there's not irrelevant points, right? I think there are some business model problems with how they've operated in their current market, but at the end of the day, they're still a massive organization with 6,000 plus employees. So that's just the reality of the state of affairs at the moment.
Got it. And you've been able to build a great brand in such a short time. Where do you think most people make mistakes with their product marketing and messaging about the brand?
Yeah, I think as a founder, especially in my scenario, right, going to a new country, one of the most frustrating things that I hear is, well, we don't do it like that. We're different here in Pakistan. It's not. I've worked in multiple countries. I've done some work in Europe, now Pakistan, US, Canada. There's nuances to consumer mentality. But when you look at it, and I talk to other founders in LATAM and in other parts of Asia, it's all the same use cases. And at the end of the day, consumers and businesses want to grow their business. And if you're going to reduce friction out of the cycle of doing anything, you're going to make more money, right? That's just the reality of it. So I think I think that's one of the biggest learnings I could say is you'd be surprised how little difference there really is market to market. It's about reducing friction. If you can reduce friction or sell time back to people, right? That is ultimately what's going to make a business successful. And that's all businesses. You're reducing friction and you're getting paid for the amount of friction that you reduce. And that's what it boils down to.
Very interesting. And you've been able to hire a lot of buyers in both Pakistan and US. How's been your approach to hiring, changed over the years, especially when it comes to, working in both the countries?
Yeah, so I think I'll give you two very stark differences between emerging markets and developed markets. So in developed markets, you can go into a business line typically unless you're like inventing a new technology like Tesla, something very physically demanding like that. If you're building a software as a service, there's typically people you can pull talent from, right? That's very easy to pull from. So for example, if I'm going to build a fintech today, I can go to PayPal, I can go to Klarna, I can go to Block, I can go to any of the neobanks. Like there's a lot of talent, a lot of good resources and experience that I can pull from. There's a big startup ecosystem I can also pull from. In emerging markets, we were one of the first startups there, and there wasn't really anyone that knew fintech, right? I think in terms of hiring, that's one of the most difficult things is it's not the raw like tech talent, because there's a lot of good tech talent in emerging markets, especially web development specifics, right? It's really kind of all the other skills which are difficult. So for example, even tools, right? So when we talk about tooling, you go out and ask for a digital marketing person in the US. They have an understanding of Mixpanel, Braze, Iterable, Tilium, all these awesome tools. In emerging markets, you search for any of those terms, they don't exist in LinkedIn, right? So there's a lot of raw training that you have to do in order to get those people up to speed, not on their ability, but really more so the specific skill sets in which they work.
Correct. And especially when it comes to executive hiring, what are the two qualities which makes the best executives, and what kind of questions do we those executives?
Yeah, I think as I've done this for a little while now, and some executives are here, some are not here. Some, after letting some of them go, right? One of the things that I think the key focus is two things. One, do they agree with your vision and your energy? So if you pull someone from a very traditional working space and they aren't used to a startup type of environment, it's generally not a good fit. The second thing is do they understand technology on the same level as you do or close to, right? So for example, because someone's a great, a great networker or a great, operations person in a startup, right? You have to have a certain level of technology understanding. And it sounds really weird to say because you think everyone knows how to use basic data tools and things other than email and the web. There's a lot of talent in emerging markets and in developed markets that those people don't know how to use those tools, right? And when you're working as a startup, they're not managing operations for 300 people. They're managing operations for a team of 5 or 10 or 20 or 50, right? So that's a much different skill set. It requires a lot more flexibility. And I think that's something people should be aware about. Just because they had a big title at a major organization does not necessarily mean they're going to be a good fit for your startup.
For sure. And especially in a fast growing startup, how do you make sure that your team is able to take as much as risk as possible with everything that they do?
Yeah, I mean, you can't blame people for failing. What I think how you should kind of judge success or not success is, one, did they put in the effort? Two, are they learning from their mistakes very quickly? And three, when they don't complete something, whether it be on time or correctly, do they come to you and say, I was not able to do this on time, I'm telling you ahead of time? I think that's one of the biggest differences between a good employee and a bad employee, especially in a startup, is not waiting until after the deadline to tell you, hey, I'm not able to complete this. And I think that's one of the things today that probably infuriates me more now versus maybe a year ago, was like, if I set this deadline, you agree to it, you can't do it, you need to tell me now, not after when that time has come, right? And so I think that's a very important thing that you should look out for. And if someone misses that too many times, a lot of times, no matter how good they are, you should let them go. You always hear the term, the old verbiage, hire fast, fire fast. And I think as a CEO, and I've been doing this for a little bit over a year now, it's becoming more and more true every single day.
Interesting. And what would you call as the single driving metric for QisstPay And what advice would you give for others to determine their North Star metric?
Revenue, especially in today's market, right? What we're ultimately looking at is revenue. Like, I'll give you an example. One of the probably biggest complaints that we get, right, is you don't have it, even though we have like 3 dozen alternative payment methods integrated into our platform, like you don't have this payment method. So I'm not gonna sign with you. Well, I look at their revenue, I'm like, well, you're gonna bring me $100 a month in revenue. So I just can't prioritize that, right? It kind of goes back. You hear this a lot, right? And until you experience it, it's hard to say. But don't be afraid to say no. Don't be afraid to say no. It doesn't matter if it's a customer or an employee. If it's ultimately not driving revenue for the business, it doesn't matter, right? And I had a conversation with a startup who recently got some funding, and just today, and these, hey, we're trying to find our fit, and my advice was focus on one vertical within a single platform. Don't deviate outside of that. If they do, they better be driving a lot of revenue in order to make that successful. So, one of the things that we started doing for a lot of the partnership integrations and merchant integration, we started charging an implementation fee, right? Why? Not necessarily because it was a revenue driver, but it was a way to keep us focused from getting distracted from things that don't drive revenue. Because it's a dual partnership when you get in bed with a vendor, right? Whether it be us or the other way around, you have to have commitment on both sides. And if that one side isn't willing to commit time and money to that, then why should you, right? And some people are very like, I got my first customer, it's great, but it's like in neobanking, right? There's 2 sides of driving revenue. It is consumer acquisition, consumer activation, right? And those are 2 very, very different things. And then activating the consumer, you still have to keep them coming back, right? So there's 2 sides of that coin, and I think people, especially in early stage startups, are focused too much on vanity metrics, and I think that's a big mistake that people make when working on their startup.
So super interesting. And we're all working or have worked remotely, but what were some of the important things that you did when you were moved to a remote work environment, especially since you're based in the US? How do you manage with your employees based in Pakistan?
Yeah, so we've been hybrid for quite a while. We still have an office in Pakistan. We have an office here in the US. We have a hybrid work environment. It comes down to results, right? I come from sales. I've led sales teams. And so when you lead sales, right, it's all about the numbers, right? I feel bad for the employees that work on the sales team in my company, because I've heard every excuse in the book. There is no BSing around me, right? What does it come down to? Revenue that you're driving, right? If you sign the merchants and they're blocking revenue, I can identify that pretty easily. But I've heard every excuse in the book. Same thing with tech and marketing. Are you delivering on the things I've asked you to deliver on because you agreed to them? I very rarely will say, you need to deliver this by this date, no questions asked. If you have a problem, tell me. Once again, it comes down to the communication. But it's becoming, that's probably one of the hardest things, right? When you have a lot of passion for the company, right, and the people that you hire, sometimes having those hard conversations to say, look, you're not performing. I think it's best that, you kind of part pass here. It's very difficult to have those conversations. But look, at the end of the day, a business is a business, right? And it's hard. It's hard to have those conversations, but at the same time, you care a lot about those people on an individual level as well. But you're just constantly learning. No matter what you do in this business, you just learn at kind of like 10 times the pace of everyone else, which is always fun.
Got it. And what should be the right tone to communicate to your team, to both your losses as well as your wins, especially your big losses?
Yeah, I think the idea, right, is, and it sounds kind of weird, right? But when you're looking at a general statement, right, it's almost like this is startup life, right? It sounds weird, but like that. So like in a big business, right, you rise very slowly and you kind of, go down very slowly. I think being from a sales background, I'm used to those crazy highs and those crazy lows. And we go 1 week signing 5 huge retailers, and then the next 3 months you have nothing, right? And you have this like crazy roller coaster of emotions, and when you're talking to their employees, not everyone has that background or has that capability to handle those roller coaster of emotions. So you try to, I wouldn't say normalize it, but you try to make them realize, like, look, just give them a heads up, like, this is startup life. Like, there's gonna be really good days, really bad days. There's gonna be days where everything gets done and days where everything seems to get stuck. So helping them realize that, hey, it's gonna be fine, right? And regardless what happens, I'm gonna prepare you for whatever's next, whether it be with this company, whether it be with the next company, or the company after that. But we're gonna build something really cool together.
Interesting. And what do you think is the single biggest hiring mistakes that founders make?
I haven't made this mistake, but I think one of the ones I see is hiring friends and family. I think is a very difficult thing. I think if you got the right relationship with that person, like for example, my friends and I are very brutally honest with each other. You'd think we'd be, enemies at the end of the day, but it's just kind of how we are with each other. But I see a lot of founders hire friends and family, and it can ruin relationships, right? And it is a very emotionally tolling time. But yeah.
Yeah, no, absolutely. I think friends and family can really backfire. And what's the single biggest firing mistakes which executives make?
Firing mistakes, not firing fast enough. I think more than anything else, people let it trend out for too long. I did that in the very beginning of the company. There's one or two people I just let stay on for way too long. And then after you kind of, and it's funny because I fired people in the past and I let them go. And it's always hard, by the way. Like, it never gets really easy. But I think the speed of which you come to that decision comes faster, right? The actual process of letting someone go is never enjoyable. Even to this day, I still have a hard time doing it, but it's also the reality of where we're at. That's the world.
Got it. And do you think there are times when founders, if you look at a feedback from a customer, should you say no to a customer, or do you always listen to the customer and make decisions based on what the customer wants?
You should always listen to the customers, right? Making decisions based off that is a completely different scenario, right? So if one customer comes to me and says, I'm having this issue and literally no one else is having it, it's not that it's not relevant. It's not that they're not right. It's a matter of priority, right? I've got a million other things I have to do first before I can even get down to that level, right? But I think from a founder perspective, if you see a common complaint, you should never say, well, that's just how it is, right? That's a terrible mentality to take. And it's really detrimental to startups, is that you say, it's just the way it is, but why is it just that way, right? And if it truly is just that way, is how do you improve the communication to help the customer understand why is it like that, right? So even if you can't solve the problem, helping them understand, I think that's really what builds a good product. I think building a good product has very little to do with the product itself, right? If you look at all the best products, the functionality in and of itself is very, very simple. Like Uber, find the closest one, they accept it, they come pick me up, they drop me off where I need to be, they get paid, the trip, 80% of the trip. Very simple on the surface, right?
Yeah.
But think about all the communication layer that happens in between. Helping the consumer understand what happened, why it happened. That's where building a product actually happens, right? And I think that is coming into this, right? I always thought, hey, it's all about sales, you build a good product, you're off to the races, right? What I find myself doing most days is actually not selling. It's not building a product. Well, it's not building a tool. It's building a product, right? It's how do I improve the communication for the consumer so they understand it better? And when they understand it better, there is a better acceptance of whatever you're doing, right? It helps increase that retention rate, lowers the customer acquisition costs, and those other metrics that you need to focus on. So I think founders don't take enough time. They focus too much on features and benefits rather than communication, which is, I think, a key thing for founders to focus on.
Interesting. And you have raised funding from some great angels and VCs. How should founder approach investor selection when they're looking at and also for valuation for rounds? What's been your thesis?
Yeah, you need to start early. I'm always fundraising. And then when I say fundraising, I'm not always like looking for funds, but I'm always having conversations like with VCs, and they're like, just be like, hey, it's been 2 months since I've chatted with you. Let's have a conversation. Don't be afraid to get rejected. You're gonna get rejected way more than you're accepted. And in terms of valuation, right, in the current market, valuations are kind of all over the place. I mean, there's some startups that are still raising. There's some startups that aren't raising at all. So I think you're looking at valuation, be conservative, be realistic. And I think you need to focus less on valuation, more on what can these funds do for me, right? So not the VC, but the actual money, like how far can this get me, right? And I think if founders focus more on those type of details, they would be more likely to get funding, because when you go to a VC and say, I need this much money at this valuation, they're gonna be like, look, I've got literally 100 other startups that have approached me in the past 48 hours. So unless you're like, your metrics are just ridiculously through the roof on revenue, it's not gonna matter, right? To really focus on building a new communication product and driving that revenue up to get that multiple that you're looking for.
Interesting. And I quickly want to do the top 3. What's your favorite business book?
Say that one more time.
What's your favorite business book?
Ooh, there is a book that I'm into right now called Product Hunt, which is really, really good. And it talks about the different types of product founders, and how they view problems in the world and how they deconstruct them and reconstruct them into business solutions. I am also a huge fan of, there's 2 other books. So that's really around product. One is more like a general customer service, customer satisfaction type of book called Rating Fans. It's a really short book. You can read it like in a couple hours. And it's a really weird book. Like it talks about like a magical fairy, like solving business. It's the weirdest book I've ever read, but I read it right out of college. When I worked at my first job out of college, and it still always stuck in my mind. And it talks about, you don't have to do 110% or 200% or 300% better. Just do 1% better, right? And if you do that continually, it builds this massive traction. And the last one is, I'd say the Challenger sale is really good. There's also spin selling. There's some stuff from Miller Hyman, right? Like, so any of those sales methodologies, I think is really important. Even if you're not a salesperson, and you're a technical co-founder, understanding how an enterprise deal works, especially if you're on enterprise sales, right? Is understanding the mind, where the mind is for a business, for one of your clients, or how they think or how decisions are made within large organizations.
Yeah, no, I think all of them are great books. I will put that in the show notes. Challenger Sale is a special one because I'm part of the sales team, so I think that's a popular one there. And if you could go back in time when you started QisstPay, what is the one thing you would have focused on or done anything differently?
I think I would have focused more on customer communication. I think, especially from a developed market, and going into an emerging market, you almost have this this mindset of, if I do this, people just know it's common sense, right? And I think that happens a lot in the US market and developed markets as well. But if you go into any login screen, like the example I love to give is a firm. You go into a firm's login screen, there are 13 or so call to actions and instructions on what's happening on the page or how to perform other various tasks that are tightly correlated to the function that you're trying to complete. And I think it's a great example of like something that I wish I would have done earlier. I think most founders get really excited about their product and focus on the features, which is important. Don't get me wrong, but I don't think you could ever put enough focus into communication. I really think that, and I think no matter how good you are at it, you can always get better. And I think even on my next startup, right, whatever that may be, a couple of years down the road, right, I think that would be, before I even write a line of code, is I will have what emails are being triggered, what SMSs are being triggered. This is here, can a 5-year-old understand what is on this without any other context? And I think a good example I always say is, hey, take this to your grandparents, great grandparents, the older person you can find, and say, here's a screen, what does this do? What are you supposed to do next? And if they can't answer it, then you need to work on your communication. And I think that's something that one thing I wish we would have focused more on in the very early days.
So super interesting. And what's your favorite online tools? Example: Gmail, Slack, Zoom.
Ooh, QisstPay. Am I allowed to say that? QisstPay. I think, to be honest, I think my favorite online tool is, YouTube Music. I know it sounds strange, but I think having the right music puts you in the right. I have different music for different things that I'm doing. I love Slack. Don't get me wrong. I love. There's a CRM tool that we're trialing right now, which is really looking really good. But at the end of the day, I think this music. I think music or fun, whatever that tool is that help you get into the right state of mind for whatever you're about to do, is extremely important. Whether it be a podcast, music, whether it be having the right software, right? For me, I have multiple mics, so just being comfortable at your desk is super important. I don't think the founders invest into good hardware, so I've got a nice headset, using a good mic, good mouse, keyboard, because I spend 12 hours a day typing on my mouse. So I think those. I think Google Music or YouTube Music, whatever they call it now, is definitely my favorite piece of software.
Absolutely, I think YouTube is also one of my favorite. YouTube Music is also one of my favorite tools. We'll put down in the show notes. John, what is the best way people can reach out to you and know more about QisstPay?
Yeah, reach out to me on LinkedIn. Always happy to connect. That's where most people can find me. I'm also on Twitter at Jordan FinTech, and I just started getting into Twitter really like a week ago. So I slowly the followers are gaining, which is pretty cool to see. But reach out to me anyway like that, and feel free to reach out to me. Always happy to have a conversation. Of course, if you're an e-commerce brand or a payments partner, would love to discuss how we can work together.
Absolutely, we'll put that in the show notes. Jordan, thank you so much for taking time speaking to us. I really enjoyed my conversation with you.
Great. Thank you so much for the time. Thanks for having me.